Come on, reset. Oh, this chart is so stupid. Well, hello again, people. Hello again. Hello again. You're ready for the madness? Yes, please. Whew, 9 minutes, Tash. Anybody nervous? Ayo, Wes, Troy, ayo. Explicit madness. There you go. Consolidating or dying, LGVN. Hmm. Uh, 150. $1.50. There you go. Yo, just chilling. Yo, long or shorts? Which way do you guys think we go? That's the which way do you guys think we go? Up or down? Which way do you think we go? The pumpies or dips? Uh, la, la, la. Spy. Isn't there like a Jerome? FOMC? FOMC. You think we go long? You think we go down, down, up, both ways? Both ways is usually the answer. It always feels like so when those minutes come out, right? It always feels like we go both ways, but then when he comes on, we go one way. When he leaves, we go the opposite way. So exactly, John. We go one direction aggressively, and then we go the other direction, and then next thing you know, we're still in the same spot at the end of the day. But honestly, sitting at the same spot at the end of the day for the S&P, 1% in the green is really good, really good. Yeah, hello. Yes, that came out earlier this morning. Citron also said they would come back into GME shorts. If GME went to $45, $50, they would come back and short it again. Ready, Tesh. Ready. Ready. Or you made on GME and holding calls. Hello? Wow. Nice. Well done. Congrats. Oh, you mean them or you? Yeah, they took profits for sure. They shorted the damn thing, took profits because obviously GME dipped. They at least doubled their money on their short position on GME. So it's not like they're abandoning their short position. They made money, took profits, probably went long, and then said, "Oh, guys, we're done." Unless it was last night. Yeah. Anyways, SPY. We have 5 minutes, guys. 5 minutes. Can you please take a look? ENSV. What's your position, Christopher? Let me know. Let's go, TJ. Let's go. Let's go. Here we go. I think the consensus is that the Fed is going to cut. uh, but I don't know if I believe that though. So, well, what the market is priced in is two rate cuts this year. So they better do something nice. Otherwise, we're going to see blood. Blood. Violence. Are you going to play that, Troy? I'm going to play. I'm going to play it. Either blow an account or I will make money, Troy. Futures. Don't forget to smash a like, guys, if you haven't already. Don't forget to smash a like if you haven't already. Hit that subscribe if you're new to the channel and all the other fun things. Safe in a profitable way. Yep. Do. La 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 la. The yoga ball. Going to bounce in the yoga ball. We are ready. Yup. You're watching SPY in the 15-second chart. I mean, today is the day to do it. Thank you, Jay's call. Are you ready, Dan? You ready for violence? Ooh wee! Come on, violence, violence, violence. Hopefully, we don't go one way and then the opposite way initially, though. Give us one direction first. Like, give us boom skis or give us like a. Give us the. Dang it! I deleted that video, Dan. Can I find it in less than 2 minutes? Though I don't think I can. Damn it! Know that video? The dude that was saying boom, and it went the opposite direction. Uh, can't find it. But I can find a video of test thrusting though. Uh, oh, no, 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 no. No, I will be able to find it. Oh, I found it. I found it. How much time do we have? We have on this candle 20 seconds. 20 seconds.
हमने राउंड का ट्रेड प्लेस कर लिया.
Let's skip it. I'll play that video in a bit. I'll play the video in a bit because we have other things to take care of, you know? Ooh, is it going to come back? Is it going to come back? Or is it going to keep going down? Oh, it's confused. It looks like it wants to. That thing is just sitting there. sitting here. Hmm. 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 Oh, it's coming back. It's coming back. It's coming back. Doo-doo, doo-doo, doo-doo. Doo-doo, 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 doo-doo. No, I'm gonna close this account. Hmm. It's Fed holds, SPY to zero. SPY is like, nah, it's okay. Yeah, SPY is like, nah, it's okay. Let me pull up CNBC here really quickly. Yup. So there you go. Indicates only one cut coming this year. So not exactly. Oh, thank you, Dan. You actually posted it. Yeah, I just wasn't paying attention. Wasn't paying attention. I'm gonna go back to the charts really quickly. I just wanted to post this. Uh, okay. Okay, let me go back to the S&P. SPY is spiking back up. Shows 100 basis points cut in versus. Okay, cool. Yeah, we're coming back. Oof. When SPY is sad, GME gets happy. Yeah, no, that thing came back. Basically a nothing burger. The market is like, okay, then what? Then what? So if you guessed that the market was gonna go both directions, yeah. So for now, we just wait for the for Powell to come in and speak. So we're gonna go both directions, but as soon as he starts speaking, I think we're gonna pick a side and then just go in that direction. So unchanged exactly. Was exactly at the bottom. It was Troy. Yeah, nice, 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 nice. Well done. Well done, skis. Um, Good job. So median forecast shows 25 basis points cut in 2024 versus 75. Hmm. Versus 75. Inflation, la 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 la, whatever. Yep. Chaos. To prevent the temptation, you're closing your account. You are? No, my temptation is still there. I want violence. I want violence. I want more. No, 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 no. Yeah, I think the markets are just waiting for the for him to come on and start speaking. So and then we can pick a side and just go. I think if we break below the bottom of this candle, I think we're gonna start flushing. Same thing if we break above the top of that candle, we're gonna start pumping. Best feature ever? You're locked out? Wow. You're actually using that feature. Yeah. I think after this Apex rubbish, I think I might just switch to Top Step or something. Mm. So there, it looks like they're expecting. I think the reason why the market is still fighting here, though, um, to oh well, no 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 no. So they're keeping rates the same this year, but I think what's keeping the market up here is that they're saying they're going to cut 4 times next year. 4 times. Reserve now expects to cut 25 basis points next year. Yeah. Again, no rate cuts this year. Maybe they're going to do one, but they're planning on doing four next year. So useless. Useless. Yeah. He is on speaking. No, he's not. Not for another 25 minutes. Unless you're watching like an old one. And then he's just going to say, good afternoon. And then the market is going to flush. Good afternoon. Blood. Dan, did you play that or no? Just watching for now. This is the video, guys. This is the video of someone trying to play the S&P. So they tell the entire class to go short. They told the whole class to go short, and then the S&P says, "Thank you, Powell is on."
हमने राउंड का ट्रेड प्लेस कर लिया
Come on, dude.
4 3
Three,
2
two,
1
one,
boom
boom. You hear that sound? That's the sound of liquidation. Three, two, one, boom. Go down. Nope. Most likely, they're probably playing ES or NQ. The dude cannot even look up anymore. He could not look up. Yeesh. Anyways, moving on. Yeah. Yep. Three, two, one, boom. So, yep. Skyrockets. No, that's the same thing we're doing. Like that's the Fed meeting, like data, right? CPI, FOMC, stuff like that, is what they're trying to do. So they're predicting that it's going to go down and then it shoots up. You've never seen that clip? Yeah. So the only reason why the market is holding up like this is because the Fed is talking about cutting rates next year, right? So then the market can kind of hang in there. But other than that, not amazing news. So the Fed has decided to do nothing. They're like, nothing. We're gonna do absolutely nothing. Thanks, guys. Nothing at all. Okay. So we wait and we see. We wait. Mm, hmm. Interesting. Three, two, one, boom. Nothing is not confidence. It is not. It is not. I mean, Tesla kind of dipped, but Tesla's done really well today. Really, really well today. So brand new all-time highs for the S&P is 540, 544 basically. So we're $2 away from all-time highs on the S&P, and it looks like it's kind of consolidating, doesn't it? Kind of consolidating. Rob, did you play? Did you play the? Did you play? Uh, uh, go longs. Still favorite to 2024. Yeah, I mean, we're actually trying to bounce. We're sitting in the same area that we were sitting at. Traders still favor to 2024 cuts as Fed predicts one. Okay. Hmm. Interesting. I have no idea. Hello, yes, I have no idea. Yeah, 28.93. Yeah. So 20 minutes and then he's on, guys. And then we should pick a direction for the market and then just go. Pick a direction and go. Three, two, one, boom. You think we're gonna dump Troy as soon as he comes on? I don't know. Yeah, exactly, Joe. Yeah, it is. It is. I do think though, even if we do end up selling off, we're gonna end up coming right back up because that's the direction the market likes to go in. Right, the trend always, for some reason with the FOMC meeting, if somehow we go in the opposite direction when he's on or when when the minutes come out, at the end of the day we end up reversing back in that direction we were going in initially anyways. So even if we sell off when he's on, we sell off for 30 minutes, we're still going to end up coming right back around, even, or maybe tomorrow, right? No, exactly, Gary. I think at this point the market has more control than the market will only react aggressively to like surprises, right? But the market makers know exactly what they're doing. They have all this data already. They do what they want. They use the Fed as a scapegoat, like, oh, the Fed is coming. Okay, let's cause volatility and make monies and pretend that the Fed actually did something. Sure. Is he taking the day off? No, he's on at 2:30. Hassan, yeah. No, he's not supposed to be on yet. It again. He always comes in at 2:30. Always, always. Yeah, deliciousness not has intestinal distress. It does look like it's finding a lot of resistance out there though, doesn't it? Lots of resistance. In a short position, yeah. Mid caps and small caps. Just wait till he says good afternoon. Oh my goodness. You've never seen a red candle or a green candle that big. Good afternoon. Oof. That has to be the scariest message you could ever hear. Good afternoon. The market doesn't even care what he's saying at that point. The market just hears his voice. What account should I have set up before I purchase Legends for one and one? So the Legends, Larry, is for Gold members. So you have not the Legend level, but the Goats. I have accounts on Robinhood, Webull, TradingView, and in the past, Locks Algo. No more power than Vita. Vita as I'm in. That is true. What account should you buy? If you have a Robinhood, you have TradingView, you have Webull, you don't need anything else, Larry. If you need one-on-ones though, that's the legend level, or you become a member and then you sign up for the like if you need like a one off, you can sign up. You can sign up for for the legend level if you want to, and then pay for like a one-on-one session in Discord if you want. Can you imagine, Sosa? GME would go mad. Mad. Good afternoon, pizza. Good afternoon. Good afternoon. Uh, and then the price and everything. Yeah, I did. I messaged them, Peter, but I've if they don't fix it, I'm done. I'm done with them. Finished. Is over. I still have a 250 though. There goes the markets coming back to where we basically fell from. Musty's in Discord or watching other things. Finished. Scam. No, 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 no. Good afternoon. What are we gonna do? Hello, Passion Basket. Hello, hello. Good afternoon, everybody. Again, if you're here to watch the Fed meeting, it starts in 14 minutes, so we're just waiting. Don't forget to smash a like if you haven't already, please, and thank you. Hit that subscribe if you're new to the channel, as the Fed is testing the 200 EMA. And if you're not a member yet, click the link at the bottom of the chat from Ninepod. Come join us in Discord. Just waiting, waiting, waiting. Tesla's going back up nicely too. Tesla almost back to 180. Nice. There you go. Robert Kitty steps up to the podium. Oh, GME is going to go mad. GME is going to instantly go to $50. For power hour, it needs to stay above 180. If not, it's down. You did. That's fine, virus. Yeah, exactly, Gary. Between interest rates and inflation, it's so volatile. Yeah, exactly, Jay's call. Yep. S&P breaking news. S&P at 220. Everybody at the bridge. I'm just waiting for that special good afternoon, once a month. Good afternoon. And then the markets go crazy. Oh yeah, there goes the boom skis. Oof. Hopefully Joe sold that short position. Uh-oh, Joe's still in that short. Yeah. Pump it? Yeah, the market doesn't care, honestly. The market does not care. Don't worry, we're cutting next year. That's basically it, though, right? That's basically it. Don't worry, we're cutting next year. Next thing you know, it's going to be 2025, and the Fed is still talking about cutting rates. They're like, yeah, we're gonna. Don't worry, we wanted to cut 2 times this year, but don't worry, guys, we're gonna save those 2 times. We're gonna cut 4 times next year. Then it's going to be 2025. Don't worry, we're going to cut 6 times in 2026. Next thing you know, it's the collapse of. Anyways, yeah. The Fed is cutting rates in the future, guys. Ooh, Tesla is pumping. Ooh, look at Tesla go. Tesla is almost back to the highs of the day. Madness. That's funny. Where did you find that thing from, Virus? I almost read it out loud. It wasn't anything bad, though. No, nobody sends me anything bad. It's just Anyways, yeah, there goes Tesla. Tesla's at 180 now. Sheesh. It's a pretty nice pop. That's a pretty nice push. We have 10 minutes, guys, and then he's on. So once he comes on, we're going to switch from watching these candles to listening to him ramble, Ramble, ramble. Again, if you haven't smashed a like yet, let's get to 100 likes before he comes on. So take a second and smash a like, guys, please, and thank you. Only 30 more people smash a like. Only 30, Yeah, that's a pretty nice push. So yeah, take a second, smash a like. Let's get to 100. So Powell doesn't crash the markets. Average turn. Funny. What is this curling? That's funny, Dan. I do wonder though if Joe is right and it's going to be a short. I do wonder. I do wonder. I do wonder. Good afternoon. The Fed clowns. These guys are too funny. Too funny. I just think the Fed should never speak honestly. They should give us decisions and then stay quiet. Like do whatever you have to do to stay away from the media, please. I don't get the whole point of the Fed rambling because this person is gonna say this and then another person from the Fed is gonna go say this and then this. It's like, what are you guys doing? Do you guys not have things to do? Like you guys not have better things to do? Like we don't need you complaining about interest rates. We need you guys fixing it. Mm-mm. Anyways, everybody wants to be a. It really is, Dave. Like it's the worst part. Yeah. Uh, do you drink energy drinks alcohol? No, I hate energy drinks because they make me sleepy, and I don't drink alcohol. Greg, don't drink. I do eat snacks though. That's my cheating. Coffee? No, I don't like coffee either. Don't like coffee. I 7 minutes. 7 minutes. Okay, let me pull up the Fed website here. Obviously, he's not on yet. 2:30, and then once he's on, I'm gonna pull up the. You don't drink, so you have to 420, Lewis. I do not. I do not. Uh, yeah. Except for the 420 part though, the reason why I don't like these things is not because I haven't tried them, is because every time I've tried something, I've tried it to the extreme, to the extreme, and then that's just made me like hate it. Like the one time I tried coffee, I tried black coffee, and like I was new to the country and I had no idea what coffee tasted like, but everybody drank coffee, so I wanted to try coffee, and I tried it, and it was horrible. So then I just never drank coffee again. And then yeah, and then there's also the drinking story. I told you guys the story, right? Yeah, that kind of ruined it for me too. So yep. It's not you, it's me. Yep. Okay, what are we doing? Gary? Yep. Yep. Yeah, KAVL. Yep. KAVL with a nice little run, guys. It's halted up already. Ooh, wee. I know we're not really paying attention to KAVL, but that thing is going off the scanners there. So if you're paying attention to Discord, maybe you caught on to that thing. KAVL, it's been halted up already as well. Yeah, that thing's gone skis. Whew. That thing alerted twice though in Discord. So again, like I said, if you were paying attention, you might have been able to catch that thing. 419 is when that initial alert came through. So somewhere around this price right there. So and then boom skis halted up KAVL. 4 minutes, and then we're gonna switch to Powell speaking, guys. 4 minutes. Enough with the news, yeah. It did, Gary. It did. It's like, you know what? Screw the Fed. Let's make some monies, please. Your average is 32 year. If it pops to 50, I hope it does. I hope it does, Samuel. Yeah, Greg. Your position is $30. I think GME is fine for now. If we can stay above the $28, I think that'd be a good thing. Don't like how we came back to the lows of the day though. It's always disappointing when a stock does that, like does really well and then comes back to the lows of the day. I think that's always disappointing, especially from green to red. But yeah, 28 for now for support. GME is gonna keep doing this though. Like I've said this multiple times. Like GME is gonna be a constant scalp. You know, like you make monies, you get out of it. You make monies, you get out of it. Um, but when you're diamond handling these things, it's gonna be really frustrating for you. Which market am I tracking, Ayush? What do you mean? Which market? There you go. Yeah, it's halted down. Yeah, nasty. The stock market. I don't know what to say. Which market? What other markets are we tracking? Okay, back to the S&P, guys. Back to the S&P. Good afternoon, boomskis. Yeah. No, 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 no. 2 minutes. Okay, let me pull up the Fed. Actually, no, I'm just gonna leave it till like the last minute, and then I'll pull it up. So for now, we stay with the S&P. We stay with the S&P. And then it's time to go all in the 250. Dan, pizza. Rubbish. 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 That looks good though. The markets have again. We're like we basically done nothing. Basically done nothing. Okay, let me switch over to the Fed stuff here, guys. I'm gonna lose as usual. As usual, Federal Reserve. Okay. And now we wait for the yup. You're ready 27 contracts? I'm ready. Ready, Dan. Ready, ready. Long or short, we shall find out soon enough. Soon enough. Good afternoon. That's when you want to be in. Good afternoon. Again, don't forget to smash a like, guys, if you haven't already. Nando's on standby. Yeah, your favorite snacks, please. Favorite snacks. Okay, he should be on any minute now. Oh, there. Here we go. I'm gonna mute myself because I'm gonna unmute that as well. So just waiting for now. Kind of. Look at these guys. They're all waiting with their questions. They all seem like, so civilized now, but as soon as he comes on, everybody's like, give me the mic, give me the mic, give me the mic. Non-stop chaos. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5% and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think let me say that we welcome today's reading and then hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings like the one that we saw this morning make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls, but we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many, because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response, which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading, and it's, kind of first level translation to PCE. We did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. How can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the, what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year, take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions. And today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long run neutral rate of interest is a long run concept. It really is a theoretical concept, can't be directly observed. And what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today, we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer run, slow moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and you will see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation with growth at a good level and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability banks in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand. And, we've taken some signal from that, but, and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters. And I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a long period of high inflation. It is people who lower income people, people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that, and that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what that you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria.
Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken? When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move and to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So and also the fact that we look at all of the whole situation. So a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too. So something like negative payroll numbers would be.
I'm not going to. I can think of things many things would make it on that list, but I don't think I'll butter them here.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data, the labor market data, the growth data. In terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Kosuke.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging market are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability. And we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
So we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there, and we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low. So we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group? your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't, there isn't any one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example. And we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
Thank you very much. You know what the market is saying to all of this? If the market was a video, a meme, the market would be this video to Powell.
So, what is your vision? Money. I mean, what is your plan for the future? Money. Like, what is that thing that you want to achieve in life? Money. Like, what is your real essence on earth? Money. Listen to me. Let's keep the money aside. What else are you focused on? The money that you get aside.
That's as soon as he's done, we go down. You know what I wish they would do? I wish they ask these questions in the Walmart, where people are shopping, just the grocery store, or somewhere else, or the streets. They need to go ask questions somewhere else, because these people that are sitting in that room, they're basically useless. They're just as useless as Powell. Anyways, look at that drop. As soon as he leaves, the market says, where you go? Where you go? Come back. Come save me. Anyways, the S&P hit new all-time highs, guys. Come on. Anyways, I like the questions where someone's asking hey, these people are struggling, man, and then Powell's like, don't worry, next year. We don't get 2 cuts this year, but next year we get 6. It's the same thing. You can starve for a few more months, but what's a few more months? You're gonna eat next year, right? Don't worry, Christmas is coming. Oh, what a funny dude. These dudes do not care. They don't give a damn. So the market doesn't care either. What did you miss? You missed Powell rambling about rubbish. Anyways. Oh my goodness. Yeah, no rate cuts. No rate cuts this year. The Fed says maybe one this year, and then they're going to do 4 next year. So the Fed said, don't worry, guys. Don't worry. Just be patient. No money's left. Put it on the credit card. Come back next year. 21% interest rate. Don't worry. Come back next year. Just a few, Sheesh. Spies falling. Spies falling, guys. So basically, we're at the same place we were at before he came on. Before any of this happened, we're in the same spot. Oh lordy, look at the size of these candles, though. That's a double top, though. If you look to the left hand side, SPY double top. Even though we made brand new highs, we never really closed above. So, yup. Maybe he wants to crash the maybe Mark. Maybe. Anyways, you think so? You think we're gonna keep flushing? I mean, if we break below this bottom, and then we might as well just go red for the day. Not gonna happen. But how much time do we have? 25 minutes, 35 minutes. Then let's go, Daddy Neta. Criminal, straight to jail. Send him to jail. Anyways, anything stand out to anybody on that call? Like, was there something that you heard that you're like, you know what, that sounds interesting? I don't think so. Same rubbish. Next year, we're gonna listen to Powell say, you know what, guys, don't worry. We wanted to do 4 rate cuts this year. Don't worry, we do 8 next year. Are you happy? The market's gonna be like, yes, Powell, yes, 8. Nobody cares. Yup. Yeah, this is looking very sus, isn't it? Sheesh. Those are some nasty red candles. You can have $5 McDonald's meals, Happy Meals. Just go to McDonald's, guys. $7 for fries? Don't worry, go to McDonald's. You want to buy an avocado? Who eats avocados in this economy? $8 for an avocado? Are you kidding me? Go to McDonald's, $5 plus GST, $99. Kidding. You think we recover tomorrow? Oh yeah, no, the S&P is fine. The S&P doesn't care. The market's going to keep hitting all-time highs. 3 minutes? We feel the pain. You know what's funny is when he said, like people at the bottom of the spectrum, people that are underprivileged. I don't know what I'm trying to say, but you know what I mean, right? So people at the bottom of people that don't have a lot to begin with. He's like, yeah, these people feel a lot of pain. These are the people that we have to really think about. But yeah, no rate cuts, not yet. Not yet. It's not time. We need more data. We need more data on the margins of society, he said. It's okay, though. We're not going to cut yet. We're not going to cut. They can go to McDonald's. $5 Happy Meals. We wait. Unbelievable. Sheesh. 99. Go to the dollar store. They have cookies. We go for the rate cut at night. Ooh, look at that. Sheesh, the markets are looking bloody, though. As soon as he's done speaking, there's always that opposite reaction, right? Opposite reaction. But that's a pretty nasty drop. My goodness. Are we going to bounce here now because we bounced here a few times, though? Is this the bounce? Joe's like, no. No bounce, no bounce. No bounce, Joe, no bounce. No bounce, no bounce. Let's see. Here we go. I just had to take a quick little scalpy, Don't mind me. Dang it, I sold. Okay, there we go. Now you can resume your dropping. Please and thank you. Another 250, Joe. Well done. Nice. That's a nice drop for the eval. 2, 3 in a row. Yeah, Dan is going straight to jail. Straight to jail. Straight to jail. Those are 2 nasty candles on the 5-minute. Oof, my goodness. Take my 1250 and go, Tesh. and then they need to give my other monies back. Criminals. But I hate inflation more. You got 2 today, Dan? Okay, nice. Well done. I knew the economy and jobs. I should have bought SPY puts. It's predictable. No, if you bought SPY puts today, though, you'd be red. The only time SPY puts would have paid you is at the very top, as soon as you left today. Other than that, the markets have been pumping. Yeah, as soon as he left, the markets dropped. But other than that, though, we've been pumping the entire time. The entire time we've been pumping. Ooh, that's a nice bounce. Looks like we're gonna get a bit of a bounce here. Okay, I think I clicked on the wrong thing. A bit of a bounce. There you go, Pavan. There's your bounce. I should call it here. You should. Let me do the math. 50. 50. Anyways, other than the S&P, though, GME's been struggling today, guys. Right? Struggle. Again, I've said this multiple times. Like GME is a scalp, right? Momentum scalp. Other than that, like just the volatility is going to be there. It's going to go up. It's going to go down. It's a bit annoying that it's below 28. I think that's a bit of a 25, Joe. Ooh, call it. Well done, Joe. Yeah, so GME is down. GME was up nicely this morning. It's now down 10% for the day. Not the best thing to look at. LGVN has also done really well, but it kind of double topped at $1.80. So if you played this thing, hopefully you took profits out of it. Other than that, though, Tesla has also done really well. Tesla double topped again at 180. So every time Tesla gets to 180, puts. Right. So now let's see if the S&P can, because SPY is looking very suspicious. Looking very weak. Oof. Look at the size of those candles, Joe. My goodness, where are we going to go? To 0? Oof. Dips. Apple has done really well. Like Apple is impressive. Apple ran all the way to 220, guys. 220, and then this the market close sell-off is taking everything down. Oh my goodness. Sheesh. Some pretty nasty drops at the end. Again, it's always like this, though. Right? As soon as he's done speaking, the opposite happens. The kitchen is closed. 10 minutes ago? Yeah, you called it. Is SPY doing an offering? They're doing something. They're doing something, Gary. Like he's gone. Our savior's gone. Powell is gone. Don't forget to smash a like, guys, if you haven't already, please and thank you. I'm going to leave it on the S&P for now. Yeah, we might actually get a bounce around this area, so that would be good. Yeah, GME struggled at the end of the day. Struggled. Come on, SPY. Where's the bounce? Oh yeah, exactly, Dan. Exactly. Like the S&P will turn around at some point and send it. At the end of the day or tomorrow or next week. Today's what? Today is Wednesday. We also have PPI data tomorrow. PPI data. So if I'm not mistaken. So that should be a good thing for the markets as well. Good thing for the markets as well. Good thing for the markets. 275 plus tax. A cheeseburger at McDonald's is $2.75. Really? $2.75. That's how much a cheeseburger cost. I'm not sure, Tesh. It's usually around the same time every week. I'm not sure. Exactly. That's crazy. That is crazy. Yeah, I'm ready for them to close the markets, honestly. There's 25 minutes left. Close the markets. Yeah. Here you go, 8 a.m., 8:30, same time. Same usual time zone. Playing volatility on days like this, though, is nice. It's very, very nice because you can catch some really good runs. Yeah, we might have a bit of some really, really nice runs. Mm-mm-mm. Are we stalling just to go back to the abyss, or are we stalling to bounce? You're holding it into the close? Anybody holding anything into the close, guys? There goes the itsy bitsy bounce. Watch that thing rocket all the way back to the top again. Ooh. Ooh. Retesting the 9 EMA on the 1 minute. Here it goes. Here goes the boomskis. Oof. There's the bounce. The bounce. Roy, yes, tomorrow. 54.30, 54.32. 54.32. Yeah, I see what you're looking at. Send it, SPY. Send it. Recover all those losses. Right back to 550. You're holding JDZG? Okay. DDT 225 and lost soda 155. Lucas, that is that's way too much, right? If you buy a stock at 225, no way you let it go to 155. No way, no way, no way, no way, right? From $2.25, no stop loss, all the way to 155, you're giving monies away. You're giving monies to Powell is what you're doing, right? You buy, again, that thing had support at $2, 190, right? So when you let it go below that level, you're asking for unnecessary violence. So next time you get in a position, please put a stop loss. Don't let that thing go to the abyss, please. Yeah, nice little curly from the bottom there. Yeah, at this point, Brian, yeah, you're looking for 25. You made $400 with 800 today and lost. You lost some again. Okay, so you lost some of it. Yeah, still though, right? When you like, that's a really good daily goal. Like $400, that's really, really good. So, yeah. When you make $400, sometimes again, if you feel like, just walk away, right? If not, walk away with 300, right? People make that mistake too much. Like, hey, I made $1,000. Hey, I'm losing $1,000. Like, how the hell are you doing that, right? If you make your daily goal, have a maximum loss you're willing to take after that. Lucas, yeah, come join us. Come join us. Come join us. That was an interesting push. Where did we go to? Yeah, Joe, really, really close. Really, really close, Joe. Is that a brand new candle? Yeah, it is. It is. Sheesh. Some of these candles are looking very, very suspicious. 24. 24. Sheesh. We might end up in the abyss again, actually. This is looking a bit sus. We might end up in the abyss again. Looking weak. Woof. Oh yeah, the S&P is about to be slapped. Yup, back to the bottoms. Woof, that's a nasty candle. That's a nasty candle, and it's not stopping. We're about to break below the lows of the day now for the S&P. Well, not the lows of the day, you know what I mean. Actually, yeah. Really close. Very, very, very close. I think better bounce, otherwise they're gonna slap it. Slap, slap, slap. Whew, that's a good double bottom bounce, isn't it? That might have been a good gamble there on the double bottom there. Lucas, you in? Let's go. Welcome, 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 Lucas. Welcome. Ooh, Lucas is like, I'm a goat, guys. That's Canadian McDonald prices. Yeah, I never really go to McDonald's. um, Lucas is like, you know what, guys? I need help. Yeah, Lucas, welcome to the community. This is your invite at the bottom. So click that invite at the bottom, follow the steps in the getting started channel. And then once you do that, go to the one-on-one channel in Discord and schedule a one-on-one, alrighty? And then we will chat. We will chat. Deal? Deal. Sheesh. Are we gonna break the bottom? We're gonna break the bottom? Oh, that's funny. Oh yeah, that thing is gonna break down here. Ooh, there it goes. New lows, guys. We just made new lows of the day. Just made new shiny lows for the day. And then we're bouncing up the 200 on the 5 minutes. So even though it doesn't show up in the 1 minute, that's the two. So it has a little bit of support at the bottom of that candle. A little bit of support for the S&P. Thanks, Powell. Too long and it's giving it back. They need to close the market as soon as possible because that thing is struggling. Struggling. Let's go. We have a new member, Hitman. Hitman, welcome to the community. Same instructions for you. This is the link at the bottom of the chat. That's your Discord invite. So click that link and come join us in Discord. Yeah, maybe we actually do see a double bottom here. We'll see. What are you gonna do, Spy? Yeah, GME is really struggling, guys. Like GME is getting slapped. Whew. Would you be surprised if GME was below $20 on Friday when, anyways, or leading up to like those calls expiring, right? So that dude really needs to do something with that position as soon as possible. Otherwise, we're going to pick him up from the bridge. So yeah, GME looks really weak there. The S&P closing above 540 though is a win, right? Yeah. Gary, yeah, exactly. Blended, nope. Straight to the abyss. Again, yeah. So Hitman, click the link at the bottom of the chat, and just connect your YouTube to Discord, and then patience, Mark. Yeah, yes. I agree, Mark. I agree. I do think we're going to be back to all-time highs again. So, and then Lucas, yeah. So again, connect and then go to the. How do I join the Telegram? We do not have Telegram. Every time someone mentions Telegram, I'm like, is that a scam? Anyways, Hitman again. So click this link at the bottom of the chat, the yellow link from the Hot Trades account. And then just follow the steps in the Getting Started channel. Once you follow those steps, it's going to unlock all the channels for you in Discord, and you should be good to go. Alrighty, so click that link, follow the instructions in the Getting Started channel. There's also a video there, second last video that shows you how to connect. Once you do, watch the very last video at the bottom of the Getting Started, and then you're good to go. Good to go. There's more. Yeah, there's more news tomorrow. More news tomorrow. That's crazy, McDonald's. Here we go again. Ooh. Ooh. Looking very, very sus. Spy's looking dangerous. Spy says today we ask for violence, guys. Today we ask for violence. How? Some of the candles on the S&P, it is finding a bit of a base there though, so maybe it actually will bottom out. You caught yourself. I thought you were done, Joe. Are you addicted? Joe is addicted, guys. He's addicted. Anyways, yeah, so don't forget to smash a like, hit that subscribe if you're new. And if you're not a member yet, click the link at the bottom of the chat there from Nightbot. Come join us in Discord. We have about another 20 minutes and then we're going to hop off and go back to Discord, guys. Alrighty? Deal, deal. Deal, deal. S&P is it's wanting to bounce. Okay, it wants to bounce. Will it actually bounce though? LGVN looks good again. Oof, look at this damn monster. What did you do, Gary? What happened? LGVN keeps failing at $1.80-ish though, so it's gonna need to break above that level. Anybody still holding this stock? I know Gary was scalping this thing all day today. Not Gary, but like other Gary in Discord. Yeah, LGVN looks like it's fighting again here. Fighting. You just sold? Oh, let's go. Well done. Well done, skis. 1 year, 12 months. Let's go. Troy, it doesn't feel like that long, does it? It doesn't feel like it's been a year, but it's been a year. Crazy. Time flies. 137. Yeah. Yes, so the S&P is kind of bouncing, right? Looks like it's creating a nice little bottom there. Send it, SPY. Pump it into the close. Upside? Yeah, no, I agree. I agree with you. Yeah, Apple got smacked. Look at Apple, guys. 120, 220, all the way down with the S&P. Sheesh. Dips opportunities or dips like, hey, we need to sell off. Yeah, good exit there, Gary, at the double top for LGVN. Well done. Well done, skis. Well done. Love it. How long have you been a member, Gary? Gary, right. How long have you been a member? Also, how long have you been trading for? Because you're scalping these very nicely. You got exactly, Brian. Well done. Well done. Hopefully, it stays about $25 now. You've been a member for 3 days. You're cooking. Cooking. Woof. You're cooking. Well done. $100. That's absolutely. I mean, that's better than where it's at now. You know, Brian. So to turn the lights off. So you went back to turn the lights and you saw a cookie on the counter and you were like, "Ooh, let me eat this." You should have sold at $33. Um, I mean, you could have because it was resistance, but I'm glad you're not holding it in the negative though. Kind of trading for a year now. Yeah, I'm glad you're crushing it. I'm glad you joined us. I'm glad you're crushing it though. S&P looks like it has a bit of a double top at that last push to the 50, Joe. And there goes more dipskis. Ooh, these candles are nasty. Some of these candles, Joe. Sheesh. Some of these candles. Weakness. You haven't cooked anything for your breakfast yet, Sliss? Start cooking, please. Brian, I like the plan. You made 220% on your Apple puts. Nice. Well done. Well done. I like it. Yeah, that entire candle got erased. The entire candle got erased. Let's see. Okay. Perfect. Ayo, Sunny. Ayo, ayo. You missed all the chaos, Sunny. All the violence. Can we get back to the 50? Are you still waiting for weakness, Joe? 50 retest. Oof, that thing is gonna pop again, isn't it? Pushing. Exactly, Gary. Momentum. Z momentum. That thing wants to break above that previous zone. Dang, that would have been a nice long off the bottom there, Joe. A nice long off the bottom. Maybe all the way to the 200 then? All the way to the 200. Send it, SPY. Keep sending it. You know what? I'm not going to say anything, Troy, because then Dan is going to say something, and then Peter's going to say something, and then Joe's going to say something. So I'm going to pretend like I don't see your comments. Yep, might as well. Hopefully you're not in a short position. 180. Oh wow, someone said Kitty could be selling, guys. Interesting. Uh, 28 months. Let's go, Joe. Let's go. Let's go. GME Kitty could be selling. Heavy selling in the $20 calls. Multiple 5,000 orders. Just like we saw him enter with. Huh, interesting. Maybe the dude is ready to exit the building, guys. He's like, thank you, guys. Thanks for coming. Thank you, thank you. I want to make at least like $100, you know? I lost all the gains. I want to sell something. I bet you that's why this thing is dumping like that. Because people are looking at that and saying, maybe he really is exiting. I don't know why he didn't just exercise those damn things. Maybe he's selling some to exercise some. I don't know. Don't know. Not a clue. Ayo, Rob. How was the day? Rob was supposed to come on stream, you know, and then he just left me hanging. But anyways. Yeah. Yeah. Moving on, back to the S&P. So it looks like we tapped the 200 and then backed off. Anyways, Rob. Anyways. You passed the 50? Finished the day good? Okay, that's nice. Well done, well done, well done, well done. Well done, skis. Oh, I see. Okay. Let's go, Rubs. There goes another push to retest the 50 again here. Another push to retest the 50. The 200, not the 50. That's 5 250s. He's past 5 250s. Dan is gonna go to jail. You know, Apex is gonna send him to jail. Straight to jail. Are we gonna break out here now? Are we gonna push it? Push it, push it, push it. Push it, push it, push it. What are you gonna do, Spy? Ooh, I need to. Okay, there we go. Perfect. Yeah, maybe the last 2 minutes. Yeah, there seems to be a little bit of resistance here, though, Joe. Might get a fat red candle there. Damn, Apple got destroyed, guys. Oof, look at that. From 220 to 212. Sheesh. If you were holding some Apple puts at 220, you're smiling. If you bought Apple calls at 220, you're crying. Crying. And guess who's pumping again, guys? LGVN. What an absolute beauty. NDRA with some news. With some news. No. Puts on SPY. I mean, it is at resistance, so. There goes 190. 190. It's a really nice run. We'll crack on this next retrace. If we go back down, yeah, it's sitting right there. Almost looks like it wants to break out though, Joe. Slowly. How much time do we have? Oh yeah, we have 2 minutes. We have 2 minutes. It's over, guys. The day is done. What a crazy day today was. And it failed at resistance right at the 200 in the last 2 minutes. Failed at resistance. No, 2 minutes. 1 minute and 8 seconds. So the day's done. We are dipping though from resistance. Dipping. Let me see if these guys are actually connected. Okay. Jax the man is connected. Hitman, I don't think you're connected yet. So Lucas is connected. You're good to go. Again, Lucas, make sure you go to the one-on-one channel and schedule. Alrighty. Make sure you go schedule. And then Hitman, I don't know. I don't think you're connected yet, unless you use a different name, which you might have. There goes the dip right from the 200, the little white line and the downtrend and the VWAP, solid resistance. See, like that would be a really good short if the market wasn't closing at in 30 seconds, you know? Oof, look at that. Nasty, nasty, nasty. Right from resistance there. That would have been a pretty sweet short. But again, we close in 4 seconds. 3, 2, 1. Markets closed. Markets said ding, ding, ding. Yeah. Yup. Resistance. Okay, I'm going to close my my Apex. Make sure everything is closed. Everything better be closed. And Apex better give me my monies. Otherwise, I'm going to visit Rob in Florida. Criminals. There we go. The market's closed, guys. If you had a good day today, type in yes in the chat. GME erased all those gains. Whew, nasty. Nasty. I bet you someone's selling a lot of shares for GME. But anyways, if you had a good day today, type in yes in the chat. Joe, raise your hand. Dan, raise your hand. Peter, raise your hand. Criminals. Sosa, well done. Just start emailing the exactly, Troy. I'm gonna have to. Some oil. Meh, Azul. I know. GME did the scammies dipskis. Yeah. Yes, Troy. Love it. TK. Yes, sir. Let's go. You lost on GME options. Big. Nadia. Yeah. Again, people really don't use stop losses, and I don't get why you guys don't like using stop losses. Pizza, funny. You send monies and we try and triple it. No, Lucas, so go into the other channel. So Lucas, go into the one-on-one like typing channel, one channel above, and then if you scroll up a bit, there's a link to a calendar. Just use that link and schedule a one-on-one call. Deal. I'm gonna copy that link and post it again at the bottom of the chat. So that's the link for you to schedule a one-on-one. MMV with the bounce, FURE with the bounce. Someone's done an offering already as soon as the market closed. Much love, Justin. See you tomorrow. Sosa, yes, please. No stop losses. Yeah, like people underestimate the value of a stop loss. I was watching a video last night as the S&P, as GME is trying to bounce. GME is back to 26, so hopefully it stays above 25. And it was this building of like people hopping from building to building, and it said this is how people without stop losses have fun. They jump from one building to the other, hoping they don't fall. So please use stop losses. CCSI. A few earnings tonight. Who the heck would exactly, Mark? It depends how big that stop loss is, though, right, Nadia? Depends how big your stop loss. A 10% stop loss is. Like if 10% means you lose like $10,000, then no, you need a smaller stop loss. If 10% means you lose $2, then you need a bigger stop loss. So your stop loss is relative. CCSI, that one's going. Okay, I'm gonna pull it up here. Again, this one doesn't really have any news, but it's pumping though. Well, I mean, not sure why it's moving like that, but it's up $2. This is the type of name that Mark likes to scalp. Rob, how did you find that? Oh lordy. Oh, that's too funny. Yeah, they were up. Where do you post those alerts like you did on DDC this morning? So those alerts, Hitman, are you connected? You're good to go. So those alerts go to Stock General Legend. So Stock General Legend, those alerts go in there. So you just have to know how to play them, which is where it becomes a bit tricky, right? So, but again, the alerts will be posted in Stock General already. So what I want you to do tonight is go to in the Getting Started channel. There's a video at the very bottom. Watch that video. It's going to explain all the all the channels in Discord for the most part, and then it's going to explain how to play the bot. There's also a brand new video in the education channel that explains how to play the bots. So if you're new to Discord, make sure you watch those videos, please. I'm begging. I think you opened a ticket. So no, not a ticket. I'm gonna send you a link. Actually, no, I'm not gonna send you a link because then it's gonna be all over the stream, and then we're gonna have people like. Okay, there you go, Lucas. So yeah, you're in the one-on-one channel. I saw that you posted a message in there. The link above, right? The calendar link. Click on that calendar link, schedule a one-on-one session, and then you and I are gonna have a chat. And then I'm just gonna roast you the whole time about why you're losing money. And again, make sure you guys watch the videos, please, right? Go to the education channel. There are a few videos in there for you to watch. Right, so how to use the bot is a video in the education channel, and then there's another video above that says how the channels work. So please make sure you watch how Discord channels, how the bot works, when to buy stocks, blah blah blah. Those videos are going to help you out. Please. Yeah, this one almost looks like it's halted, Musty. The spread is really fishy. Really fishy. You can use a trailing stop loss if you want to, dolls. Right? Like your 10% stop loss, whether it's a trailing stop loss or just a 10% stop loss manually, should be your max loss, right? You can also just use manual numbers. Like if a stock has support at 190, you put your stop loss on 180 something, right? So even if it's not 10%. So I don't want to be telling you guys that, hey, it's 10% stop losses and then you guys are making money and you're up 20% and then you leave your stop loss at minus 10%. So it depends, right? When you're in the profits, you're not losing 10%, please. Above $1. Sus. Nadia, again, become a member. Sign up for the goats. Schedule a one-on-one session so we can talk about stop losses and other things, right? If you're struggling, and you're not investing in yourself by getting a goat membership or getting a legend membership or joining Discord, you're playing yourself, right? So if you need help, ask for help. Alrighty, Nadia, you lost more money today. You lost more money today than any Discord membership for the entire year on options, on GME options, right? Because you're not sure how to set stop losses. Like you guys are losing a lot of money by not knowing the basics. So if you're wanting to make monies in the market, learn the basics, invest in yourself. You want a one-on-one? Well, you have to become a member first. So the link is at the bottom of the chat. Become a gold member. Anyways, moving on. LGVN still looks really good here, Musty. That thing looks like it wants to break 190. Hopefully it does. Let me take a look. You're done, Lucas? Okay, as long as you scheduled a session, we're going to chat. I still need the link to get the alerts and join the Discord group. This is Abraham, a DKK. I thought I sent you a link. I'm going to send you another link here. So just click the link. And then connect. You have to connect first, right? So that's the invite link at the bottom of the chat, EKK. That's your invite link. Nadia, you're gonna have to become a member. So click this link from Nightbot. Right there, you have to click the link and then, oh my goodness, Lucas. You're in GME at $63. You really need a one-on-one session because you lost more money in GME than you could ever lose being a member in Discord. So I'm glad you're finally a GOATS member now. Again, you scheduled a call. We're going to start off by roasting you and your GME position. How did you hold from $63 to $25? How? Also, how did you wait all the way to $63 to buy? Right? This is why it's important to be a part of a community, because everybody was spamming GME in the 20s, the 30s, the 40s, and then so if you see if you see that amount of, look at that, right? $10,000. You lost half of that money's in GME. Just like that, poof, gone skis. Anyways, PFRX, PR. Yeah, that thing can break above $1.15, Musty. $1.15. Anybody still holding LGVN? Yeah, so DKKM, click the link right below your comment there, and then just follow the steps in the Getting Started channel, please. Do you think the Fed will have good news, Timothy? No, the Fed doesn't have any good news. You had to scalp it again, Gary? You're crushing it. Keep crushing it. Love it. Keep crushing it. Please and thank you. I'm gonna copy that video. I'm gonna post these two videos again in the channels. PTPI is also pushing now too, isn't it? PTPI. This one has a history of doing some crazy things. Petros. Where's Pita? Pita, this is your stonk. I'm gonna post those videos again. So if you haven't seen those videos, make sure you watch those videos, please. Anything help with? There goes Petros. Petros. Education. 76 cents, 41%. Oof, cooking. There you go. Yeah, that thing is so the time to get into this would have been right there at 60 cents. Marcos, if you haven't watched that video yet, Marcos, the one I just posted in Stock General, please watch that video. This would have been your entry. So you're looking for the breakout, that initial breakout. Yeah. If not, yeah. So if you want one-on-ones, you have to become a gold member, Nadia. Yeah. Yeah, watch that video, Marcos. It's gonna help you out, and if you still need help, please ask. Already, like if you're struggling with these alerts, ask. We're gonna do a class this weekend, and if you have more questions, you can always ask. We're gonna do a Legends class this weekend. Deal. Getting crushed and missed earnings. No wonder they went after Powell. Exactly, Mark. They don't really care, do they? You made 30 on core. Oh, CR. Well done, Timothy. Congratulations. Yeah, the Fed never has good news. See you in Discord. See you in Discord, Joe. When did you add that to the? I did not. I did not. The education stuff, I did not. Uh, so, and with these things, you want to make sure that you secure profits on the way up. You know what? I have nothing to say to you, Dan. Nothing. No. DUO is also now cooking, isn't it? DUO. Sheesh, these things are coming in quick. That one has resistance right there with that where the white line is. Yeah, some of these things move really, really quickly, like really quick. Resistance, resistance. NQ is pumping again. Send it. Okay, I closed my futures accounts already, so no more scalping. Yeah, officially it looks like he's selling instead, so who knows? Who knows? Stupid NQ. Joe, okay, I will. I'll take a look. You did, Sosa? Look at that, guys. Like some of these guys are getting into these positions really, really quickly and making monies and moving on, right? Sosa was able to get into that alert, made $350 in what, 2 minutes, 5 minutes, done for the day. Well, I mean, that's extra gains at the end of the day. Sosa, how come you never use your member accounts? Why do you always use this account that isn't a member? Sneaker and boutiques. Are you advertising, aren't you? I like it. And you have a picture of a Lambo. So how come you never use your actual member account? You know, you need to become a member on this account too, Sosa. That's what you need to do. I'm kidding, by the way. DXF with a bit of a pop. So many names pushing after hours. So many names. Is Apple still selling off? No, Apple is at break even after hours. Oh, Lord have mercy. Lord have mercy. Yeah, PTPI all the way to the top, all the way to the abyss. Like people are jumping in really quickly and then jumping out really quickly. So the only thing you play on these bot names is breakouts, please. Breakouts, and leave them alone. Make your monies and move on. Don't time in hand. Especially if a stock doesn't have news, don't time in hand. NUVO. NUVO. What? Yeah. And NUVO with another push. I'm gonna pull up that one. NUVO. 209. The spread on some of these things is, oof, look at that thing, 220. That's what I mean. Like the spread on some of these things is really scary. Like the breakouts, if you can catch them, are really fun, but if you miss them, yeah, very dangerous. So just wait for the next breakout. I'm waiting for you, Sosa. Okay, scheduled and scheduled. Sheesh. I'm gonna need to like open more sessions for the calendar. Maybe like on the weekends or something, so we can do one-on-ones on the weekends. Because it's gonna take me a long time to catch up. Yeah, because the one-on-one calendar is all the way to like what today's what? Okay. Go. Dan, that's okay. Become a goat, Dan. Become a goat. You know what? You know what we should. You know we should make Dan become a goat today, just so Dan can come say hi and then leave. Dan, just do it. Options. Yes. From next. Okay. I do not, Peter. Please contact Pablo for more FPL advice. Okay. Yeah, some GME good news, maybe. AVG has been pumping. Weren't those guys supposed to do a split or something like that? Splitties, maybe? Please? Fine. Fine, I will look. AVGO. Don't they have a split coming up? The damn thing looks good. They reported earnings. 8% rally. $1,600 for a stock? When's the split on this thing? Are you holding calls on this thing, Yi? Oh, 10-1, right? 10-1 split. So yeah, it looks like they've reported earnings and the stock looks amazing. Look at that damn thing. Sheesh. $400 and then boom skis all the way to $1,600. And right now it's sitting all the way up there after their earnings report. And it's still pushing. It really is amazing though. Like that's a nice looking this is what Tesla wish when Tesla goes to bed at night, this is what it dreams of. It's what Tesla dreams of. Like, please, can I become a $1,200, $1,600 stock? The market's like, no, you belong with the price of BBIG. And yeah, that looks good. Bet you one of these stupid scams is gonna run overnight, but run. Ad is pushing up again here now. That's the wrong one. 20%. Na, 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 na. Uh, 2 weeks till CMG. Yeah. CMG, Chipotle. How these things get all the way up there? Crazy. Crazy, crazy, crazy. La, 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 la. Let's see. Every morning and gets mad because I turn on a radio speaker loud. Just let's go, Sosa. Let me know if you have any last questions, guys, and then we're gonna hop off. Any last questions? And if you haven't smashed a like yet, what are you waiting for? Smash a like, hit that subscribe if you're new to the channel. And yeah. If you're not a member yet, click the link at the bottom of the chat there from Nightbot. Come join us in Discord. Alrighty? Alrighty. Alrighty. Cool. Okay. Yeah, so 2 more minutes, guys, and then we're gonna hop off and go back to Discord and continue the violence. I might actually have to open up like. Have a wonderful evening, Sosa. Absolutely, have a wonderful evening. Much love. Let's go. On okay. DXF highs of the day. Yeah, all of these stupid penny stocks are just randomly pumping one at a time. It made some money today, Sunny. Well done. Yeah, NVIDIA, the entire market kind of cooked today until the very end. Until the very, very end. No last questions, guys. Again, have a wonderful evening. Be safe. Don't do any crazy things, please. And if you do become a member when the stream is done, just send me an email at the top of your screen, Hot Trades X, and I'll send you an invite. Have a wonderful day, evening. DXF. It was pushing DXF, I think. Yeah, it had a stupid spike and then dropped again. Like these penny stocks are, like they really don't have a whole bunch of volume, right? One green candle, one fat red candle. Stuff like this is really scary. So really important to look at the chart because this stuff, meh. When you see a fat green candle like that, be very careful because it looks like a breakout. You're better off waiting for the retest. Lincoln, Jill, Dan, much love. Sunny. Bye, guys. Bye, 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 bye. Bye, guys.